Hey everyone, welcome back to the channel. Another week, another weekly strategy. Now this week, the USA has ended their daylight savings, okay? But in the UK and Europe and, countries that are still observe daylight savings, we're still holding on until like 28th of March, which means that the New York sessions are starting 1 hour earlier and also ending 1 hour earlier, of course. Now, when it comes to this week's releases, you really want to be flat for the FOMC rate decision coming on Wednesday. And then also, if you're trading crude oil, you should be flat for crude oil inventories, also on Wednesday. So let's have a little recap of what I said last week versus what actually happened in the markets. Starting on gold, doing like a bit of a top-down approach. This is a weekly chart. I was talking about the weekly demand at these levels. Can't be bothered to drag out a continuous contract, but there is a weekly demand here. So basically I was speculating that there might be a reversal, a rejection at the demand, which did happen. So the whole week ended up with a strong inside bar. And therefore this week I'm looking at more upsides as a continuation of that reversal. And there's not really that much to say. I mean, I'm going to go through the daily chart with you as well. There has been a little bit of a slowdown. However, this whole thing can be looked at as kind of like an RBR or the start of a rally-based rally formation. There's some supplies around this particular price. So that's why the price is kind of crawling and, they're kind of trying to break through it. And that's why I really don't like trading into supplies. Also why swing trading annoys the hell out of me these days. Because, you come across these sort of areas and then you're like, okay, now I have to stay in this trade for like 2 weeks before we make another leg up. Whereas as an intraday trader, I don't really have that problem. But it's a progression. You can't jump from being, swing trader, investor to day trader. It takes a number of years to get everything, all the skills into order. And, I'm sure that without my mentors, I really wouldn't have been able to understand half of the things that should be done with profile, which is one of the big reasons why I actually ended up making my own pro development course. Because, no one really explained it in a more simplistic way, I guess. Anyways, nothing else to say on gold, so let's have a look at crude oil. Now last week I was talking about the strong uptrend. I also mentioned a bearish engulfing that could bring a little bit of a turn in the markets, but in the end it only brought like an extra day of a down move. And then come Thursday and Friday, the markets pushed back up, which is kind of what I expected anyways. So now we have this consolidation at this newly formed bearish engulfing, which represents a supply. So it's a newly formed supply. It's a supply that doesn't have a terribly good profit margin for a swing. But when it comes to, intraday trading and stuff like that, it might be just enough. Another thing of note is that, for now, the price is just pinging between this supply and this demand here. So I'll be following that, but I'm also going to be matching what is going on with the auction process with what I'm seeing on the larger time frames. And because of that, I don't have a definitive direction, because now it all depends on the profile and what, the daily ranges are looking like, what each of the sessions is looking like, what did London do, what did Asia do, but when I do look at the weekly chart, let's have a look, it still looks bullish. I mean, this is a rather neutral candle, so it is very possible that we go higher from here. But it is equally probable that the market is going to smash through this weak demand and go down to test the area where this move first came from. So knowing that, we now have these Q points. What are Q points? They're established swing extremes. It's my concept. You're not going to come across it anywhere else. And because of that, anytime you start to have some kind of a swing, that means that this trend is not super strong anymore. So, the further upside is no longer a given. And that's why when the market looks like that, you suddenly have both directions that become high probability for intraday trading. And obviously it depends on whether you open long inventory, short inventory, how far away from value of the previous day, you know, a whole bunch of other supportive factors. So because of that, you probably want to keep an eye on my Twitter to see what I'm doing if, you know, if you're somebody who's already on the pro dev. Otherwise, you're not going to have any clue what I'm talking about. But anyways, trying to be flat for FOMC rate decision, keeping it short and sweet for today. Keep an eye on my channel for an announcement about upcoming Market Stalkers YouTube memberships. That, you know, I'm planning to do that sometime this week, I hope. So anyways, thank you for watching. Don't forget to like and subscribe, and I'll see you guys next time.